Thanks for tuning in to BQ Conversations. I'm your host, Niraj Shah. And the idea of doing this conversation today with a very special guest, Kenneth Andrade, is to try and pick his brains around the current developments around the themes that are really working. So all of us know that some of the export-oriented themes are working, and the obvious suspects would be IT, would be pharma, and maybe some specialty chemicals. But is there an underlying developing theme that is slowly getting formulated, which might actually show its true face over a period of the next 4 or 5 years? And is Kenneth Andrade, by virtue of his portfolio adjustments, already playing it out? And what kind of runway does this have? Let's ask him about this. Kenneth, so good having you. Thanks much for taking the time out. Well, the genesis of this conversation came from some of the statements or some of the presentations that I read about what you are doing in your portfolios. And is it safe to say, Kenneth, that something that you've been kind of referring to, which is deleveraged balance sheets, capacities set up already, now might start getting orders, and therefore manufacturing could be that nascent theme which could really develop going ahead?
So Niraj, there's a lot happening on the macros. Okay, but before we get to the macros, I think what we've been doing at Oldbridge over a period of the last couple of years was trying to find pockets of opportunity where there was a lot of valuation comfort. And somewhere in 2018 and 2019, and these were the periods of time that we've had extensive conversations, we stayed away from the business, from any consumer-facing business, and to a very large extent from financial services. Now, both these industries, they were showing tremendous amount of growth, but both these industries were interdependent on each other because there was consumer leverage that was playing out with the banks, and in consumer companies, whether discretionary to a level of non-discretionary consumption also was playing out because per capita incomes were significantly higher. But that, like it does in all cycles, it created valuations which at some point in time became unfathomable. A lot of that got given away after the crisis that we have, and usually you have a crisis before valuation came away, and that was the strength of the market into 2019. So 2020 we started off on a different plane. So the market suddenly moved to find those value or those pockets of value which were there, and they happened to be in two big parts of the market. One is IT, second is pharmaceuticals, and that's where the rush of early money came in. And that's quite normal, because when macros do get disrupted, they move towards protection, or as they say, defenses. And protection and defenses usually come in a pocket of the market where valuations are quite, should I say, valuations are right, or they're cheap, or they are away from, and that's the dislocation that took place in the market. So that's where value starts off, and which is why you've seen the breadth of the market improve quite significantly. But on a more, if you switch back to macro, so the micro was valuations and the macro has been what's happening on the underlying. So what's happening on the underlying is, as we go into 2021 and 2022, I think globally as well as in India, there's one big impact that has happened, and it's happened at the income levels. Okay. And incomes are not going to show inflation in the near future.
Yeah.
If that's not going to happen, there is a shift in the underlying momentum of an industry we knew that was doing very well to something else. And I think and that will play out probably in the next decade. So yes, that's what the global macros, and that's how the way the global macros will move. And the second underlying thought process is that there's going to be a relocation of the supply chain. Now, everyone globally is talking about just 2 or 3 events that will shape the next decade. One is relocation of the global supply chain. Second is healthcare security, and then is food security. And if you have your portfolios in any one of these 3 large events, I think you should be pretty much well off to capture the next bubble, maybe in about 7 to 10 years from today. Okay, so so recalibrate as to how you've been thinking in the past. You look at business opportunities that are there on the ground, which address any of these three parts of the market. In India, I mean, we've found industries in the past that have fed into the global supply chain, whether it's IT, whether it's pharmaceuticals, now it's chemicals. We see this happening in building materials, and we see this happening in engineering, light engineering, or even the automotive businesses that are there. So that's how probably the next decade will shift up. And it will have far-reaching implications also. I mean, far-reaching implications because manufacturing and services are very energy intensive. So the whole value chain of manufacturing or services doesn't end up with just the front end. Works into the back end, into the regulatory aspects of utilities, communication, etc.
Yeah. Kenneth, so, within these themes, there are some businesses which have been around for a really long time, have these supply chains, if you will, already existing, and have moved ahead, then faltered, and are now starting to move up. I mean, auto ancillary is a classic case in point, right? For example. Now, to your mind, where are you finding, or where do you think a market at large will find favor and give valuations? Because suddenly, I mean, I'm just using a case in point, right? Back-end manufacturing, and one announcement about import substitution, even if the opportunity is just 5,000 crores, is giving a leg up to stocks like Dixon, etc., like nobody's business. And some of the others are just still trailing despite an opportunity likely being there. So which part would probably do well, the new and the fancied ones, or the tried and tested ones?
So there you'll have to go sector specific, or you'll have to go stock picking to figure out as to how the growth opportunities work out there. But we like to participate with growth, but we are predominantly value investors before we become growth investors at that point and after a particular structure. So yes, there has been valuation comfort in the last 2 years. We've been able to buy into a number of them, and it's right now, I mean, some of them are playing out reasonably well. But the best way to play this entire structure is to look at the back end that actually. So manufacturing can be, like you said, it can be electronics, it could be iron and basic metals, it could be chemicals, it could be pharmaceuticals, and it can be any of those numbers. And you could run a diversified portfolio at the front end. But at the back end, if you look at how the market's essentially consolidating, you go to the utilities. Okay, look at where they trade. Adjust for mortality rate, which could be thermal power assets. Okay, and you will find the entire gas chain. Okay, the gas chain, or some part of the renewable energy structures which are changing in the marketplace. They are not anywhere priced to perfection yet. Okay, so that's how we try to build it. At the front end, obviously you'll get a few manufacturing names that are there, and there are a lot of them out there, even in the spaces that have run out. And you build it backwards to see how utilities fit in. So for us, it is stock picking, it's valuation comfort, monopolies that get created because no one's invested in them, and by default they become monopolies. You look at the balance sheets; if they're not stressed, and because they're not stressed, they have capacity to reinvest in the cycle all over again. That's second. And third is there is a very large window of opportunity should the market transition around the west, west, or even from an India demographic, trying to find new participants in individual industries.
Okay.
But I just to top it up, I think what we necessarily need to know is that we're moving away from a structure of targeting 3% of global GDP, which is just the India market, to 100% of the global market. I mean, if you eliminate the world's largest producer, so you're still hitting about 60% of the world market, right? So the scales could be quite dramatically different from what you've seen in the last decade or two.
And you think that the average Indian entrepreneur has got that hunger to be able to compete at that highest level and make sure that he or she, of course, and leave her mark there. You're seeing that within the promoters that you talk.
Oh yes, there are plenty of them out there. All of them have already set up capacities, and all of them are got solvent balance sheets. They've been through the grind. They've got test products already out, or they've got utilization which are unutilized, and they've got they've already got trial orders which they've catered to, and now it's just the scale up that is there. So give it about a year to 3 years, and we will have very dominant international franchises coming out.
That's remarkable. So, Kenneth, then other question is, you are, how do I say it? So, your investors might be comfortable keeping money parked, and naturally so in a product like the one that you or any of your peers are running for a considerably long period of time. My question is, you are comfortable buying businesses which may not necessarily have immediate traction in earnings or order flow. The traction might start coming in 6 months down the line, and the actual results, the bump up, might come in 1 year, 2 years, 3 years, 5 years down the line also. Because I heard you say that you believe this is the theme for the next decade.
So remember, teams always start out, or portfolios always, the way I've built portfolios, it's always had a valuation bias. And then if you get the valuation bias right, and then you get elements of growth coming through, it all polarizes into one part of the economy.
Okay.
So let's go back to the consumer cycle that is still in pockets prevalent out there. Tell me a consumer business that didn't participate into 2009, or give me an NBFC that didn't participate into 2018. Sure, there are solvency problems that exist now. Okay. So you have to start. You have to have a starting point, because growth can't be indefinite, especially when you have a number of new participants into the cycle.
Okay.
Market always changes, and go back to 3 decades and every decade has ended up with the event. Every decade has had a new leg up or new participant out there. You got to choose as to whether the cycle is changed or not. And and that's a call that we've already taken.
Yeah, that's true. Well, okay. So, Kenneth, what I would do is, this is lovely to have this thought from you about what's really happening. I love the whole example that you gave about how the consumer inflation is not happening, and therefore you have to look at the underlying shifts. And thank you for that. Viewers, keep in mind, before I'll ask the last question, but keep in mind that Kenneth Andrade is going to be a part of our Alpha Mogul series starting from this week, and a detailed conversation about this with him will be coming on the show that we'll have with him. But Kenneth, one final question really on at least this one. You've spoken in the past about there being manufacturing capabilities. You've told us today about how companies are now starting to get trial orders as well in order to prove the metal. Would you presume, or would you believe that a part of this is also turning out to be true because of this whole narrative in the minds of all global companies about wanting to diversify their supply chain? So companies might actually be B2C in that sense on the global front, or they might be back-end manufacturing or contract manufacturing for the larger global companies which want to diversify that supply chain. Both would happen.
No, I don't think we'll be consumer-facing businesses very soon.
Okay.
India is not going to be a consumer-facing. Indian companies will not be a consumer-facing business in the international market. Look at IT and look at the generic space in India. That's a model that we'll follow in every other industry that combats out there.
I get your point. Okay, great. Kenneth, so much more, and I look forward to the Alpha Moguls interaction simply because this is, if it is a decadal theme, then it deserves a lot more time than what we have at hand today. So I look forward to that. Thanks so much for spending some time today and giving us a sense of how you're thinking about this.
Thank you, Niraj.
Pleasure was ours, Kenneth. Thank you. And viewers, thanks for tuning into this leg of PQ Conversation.